problem with most people is they're stuck in microeconomy. You know, they don't see the big picture. And I would estimate 90% of Americans just believe that don't worry, America will bounce back. I think it'll be happy days are here again. And as a U.S. Marine, we call the people who are stuck in the microeconomy, they got their heads up their asses. They can't even see what's happening in the real world. So our guest today is Richard Duncan, and his book, his service is called Macro Watch. So let me get this between micro and macro. So I'm talking to many real estate agents here in Arizona. They said, "Oh, don't worry, interest rates are going up and all this stuff, but don't worry, Arizona is hot." That's true, because the people are migrating out of California, Chicago, New York, and now Florida, they're moving here, So Arizona is good. So on the micro scale, these real estate agents are accurate. They're going, yeah, I don't have to worry, man, I live in Arizona. So that's having your head up your ass as far as I'm concerned, because you can't see the macro. And when you look at the macro, the whole world is collapsing around it. And it's going to be good for Arizona, maybe because people will move here and all this stuff. Well, let's say that China whacks Taiwan. Well, that's good for me in Hawaii, because all the Taiwanese will move to either California, Arizona, or Hawaii. So that's micro and macro. So let me give the definition of micro is you got your head up your ass. You better stand around and take a look at what's going on. So we're crashing, like it or not. The question is, how will you survive it? And that's why I'm very happy to welcome Richard Duncan, my friend from Thailand. And he has a macro view of the world where most Americans don't even know where Thailand is. Welcome to the program, Richard.
Robert, thank you so much. It's so great to see you and great to be back on. Thank you for having me.
So my friend, you've been calling this for a long time. The dollar is in crisis, isn't it?
Well, so our economic system is in crisis, and I'm really worried now that we're on the verge of a serious economic crisis that could see the destruction of trillions of dollars of additional wealth before this thing is over.
Yep. And then when you wrote the book, The Corruption of Capitalism, I mean, give me a break. Are we corrupt or what? Has it been corrupted?
So capitalism, in my view, became corrupted at the fundamental level when we stopped backing dollars with gold.
Yes.
And to make a long story, not too complicated a story, but to make a long story short, this unleashed an explosion of credit. Credit absolutely exploded. Total credit or total debt in the United States grew from $1 trillion when I was 3 years old in 1964 to $91 trillion now, from $1 to $91 trillion in my lifetime. And during that process, that created a great deal of wealth, a great deal of economic growth in the United States and all around the world. But our economy became addicted to credit growth. Our economy must have credit growth to stay out of crisis. And now credit is contracting when you adjust it for inflation. So this is a very serious problem for our economic system, which I call creditism rather than capitalism, since it's driven by credit growth.
So that's why your book, The Corruption of Capitalism and the Dollar Crisis, are essential. I mean, they're more timely today than ever before. And once again, the code is CRASH, C-R-A-S-H, get a 50% discount, because I want you to pull your head out of your butt and take a look at the world, because Richard sits in Thailand. He's an American. He sits out there and he can see the world, but Americans can't see past their house. Micro is this. You're standing you're pumping gas into your leased SUV, and you're going, why is the price of oil going up? That's micro. I mean, they can't see it. But inflation, I'm afraid, is systemic now. And a lot of it is because what Richard's talking about is creditism. They just print so much money. Instead of solving the problems, they print money. And now it's going to backfire on everybody. So, Richard, there's a lot of things I want to talk to you about. One is the Nord Stream 2, they torpedoed the pipeline. You have the war in the Ukraine. The English pound crashed. Japan's yen is in serious trouble, and I guess North Korea fired some rocket at the Japanese. You have inflation being systemic, and you have the BRICS, BRICS, Brazil, Russia, India, China, South Africa. I mean, nothing macro here. So you want to take anyone on? First of all, what happened to the English pound? Because that's to me, with the gilts and all that other stuff. Gilts is a government bond or something like that from England.
Right. So that was the second blow we've experienced in the last 2 weeks. What happened there was the new English prime minister and her finance minister announced very large tax cuts, very, very large tax cuts, with a lot of this going to the wealthy people, the wealthiest parts of society. And that meant that the UK government was going to have to borrow a great deal of additional money just at the time when the Bank of England, which had been buying government bonds through its quantitative easing program, it was planning to start selling government bonds. So suddenly, England looked like a third world country. Its interest rates on its government bonds doubled in about a 2-week period. They went from 2% on a 10-year government bond yield to 4%. And normally that would make the currency appreciate. But the English pound started dropping like a rock. It fell from 1.15 to the dollar on Monday last week. By Friday morning, it was 1.12. By Friday afternoon, it was 1.09. And on Monday morning, it dropped to 1.03, the lowest in history. And so this huge swings in the currency, and more importantly, in the interest rates on the government bonds, was so violent and so unprecedented that the UK pension funds thought that they had cleverly hedged their positions with these derivatives contracts known as liability-driven investments. But the moves were so large that the people they had these derivative positions, hedging positions with, started calling in their margins, and they couldn't put up their margins. So they got sold out of these hedging positions, and it looked like the entire UK pension system, the various pension funds, were on the brink of going bankrupt.
Collapse.
And so the Bank of England had to jump in, and at the beginning of the week, they intended to start reversing quantitative easing. They were going to do quantitative tightening. But by the end of the week, they reversed course and announced that they were going to do even more quantitative easing. They said they'd buy £65 billion of additional government bonds over the next month or so. And that has restored calm temporarily. And in fact, it's injected a bit of euphoria in all the markets yesterday and today, because the markets and the investors hope that since the Bank of England reversed course and started loosening monetary policy, they hope the Fed is going to do the same thing.
Right.
But it's not.